Today, we're going to take a look at the state of real estate across Canada and why, as a 27-year-old in Ontario, I ain't buying it. So let's jump right into this.
Drop it.
Welcome back, my passive income investors alike. I'm going to drop some knowledge bombs on you today while we break down some analytics of real estate across Canada. And we got some very broad numbers here we're going to break down to give us a baseline. And then we're going to look at an actual triplex deal that I found to see if investment real estate is worth it. But taking a look, so we get a baseline number here, we can see the average home price in Canada is around $531,000, which is a hard median because if you're in Toronto, you're paying a couple million. But let's say you're out in New Brunswick, well, you could be paying less than, say, $200,000. But so we understand what's going on, presume you take out a $500,000 property here. You're going to be putting 20% down or $100,000, leaving you with a $400,000 mortgage at the average interest rate of only 3%. We can see that's going to be roughly $1,892 a month, which is pretty extreme, but we're looking at investment real estate, so we don't want to pay as close attention to those numbers. We want to look at an actual deal to see, get away from the median and let's see what's actually going on here. This is a triplex that I found in Peterborough, Ontario. If you don't know where Peterborough is, here's a little map to give you a better idea. We got Toronto all the way down here, and about an hour and a half out, there is Peterborough, where I discovered this really understandable property. It cost about $800,000. It's got one tenant. So let's break these numbers down, starting with the base mortgage before we start figuring out if we can make a profit here. So taking a look at an $800,000 mortgage, we're going to be putting about $160,000 down on our 20%, leaving us with roughly $640,000 in our mortgage calculator here. At 3%, we're looking at about $3,028 a month in payments. Now that might seem extreme if you're not looking at investment properties, but the idea is we want the tenants to cover the mortgage. So getting right into this, taking a look at the average cost of an apartment in Peterborough, we can see it's about $1,230 a month, which is fairly within reason. And if we go back to actually taking a look at this deal, the problem is they have one tenant in here that is being rented for less than the average rental price. So that's already not the best sign that we want to see. But let's continue to plug in some numbers. So let's presume we're able to get $1,230 a month from each tenant. We're going to have 3 tenants in this triplex, giving us about $44,280 a year or $3,690 a month, which isn't terrible at all. But we're going to do a little bit of math to give you a better understanding because we got to talk about property taxes, home insurance, renter's insurance, all this stuff. And that is something that I'm not including in here. I'm just going to include the property tax just to show you how this deal would run. So if we minus the property tax out, presuming we're not paying for any repairs, insurance, or anything else, we can see that we're going to be making about $3,369 a month. Now, if we minus out the original mortgage payments, we're going to be left with about $341 a month, which if we times that out over a year, gives us about $4,092 of profit. And again, we're still not talking about the insurance or anything else. So these numbers are already looking fairly bleak. And if we plug that into a percentage calculator, we can see, well, we're only making about 2.56% on this property. And it's not even going to be that, guys, because that 2.56% is going to get eaten up by repairs and insurance. And God knows what else you might need to get this property in a functionable state. A lot of people will argue with me here and tell me, yeah, but at least it's paying the mortgage. You're going to get, this $800,000 property you're not really going to be paying for because the tenants are going to be covering it. And it's like building up a bank account for you. But I personally am a cash flow positive guy, and I like paying attention to real estate where I can make at least 5%, and I can't find it anywhere. So if you guys can, leave me the links in the description below, because the places where I look for real estate is in what we call REITs, Real Estate Investment Trust. And if you want exposure to Canadian real estate, heck, if you want the best Toronto real estate, you could buy something like RioCan, which automatically pays out a 5% yield. Now, obviously, you're not getting a mortgage paid for. You're not leveraging that $800,000 you'd be getting from the bank. But at the same time, if you had that $160,000 down payment, well, you could immediately get the cash flow of 5% without having to manage any properties whatsoever. And you could potentially get the same growth rate even out of the equity side if you kind of look for better growth real estate companies out there. Like over the last decade with something like an O Realty Income, your rate of return would have been somewhere around 122% over the last decade, probably more than that. I got to try and line this up accurately here, but let's say we take out 2010 all the way till today. Yeah, we're looking at over a 200% return on our money. So say you put $100,000 in here, guys. Well, you're going to be looking at almost $300,000 plus you would have been getting a paycheck that is increasing over time because these companies increase their rents and they actually, buy more properties. So the cash flow goes up and you get a percentage of that. So your dividend yield might even increase. And this is more appealing to me personally as a real estate investor because I don't live anywhere where real estate is understandable to me and where I have the leverage to make it make sense. Where I'm going to drop some more knowledge on you in a sec, but taking a look at like a 10-year term over Canada where they don't tell you some really important facts behind investment real estate is presume in 10 years you made a 74.47% return, which is severely outpacing the US, or so it would appear. But what they don't tell you is because this is all in Canadian dollars, the Canadian dollar has actually dropped since 2010 quite substantially. We're looking at about a right around a 25% drop. So if you go back to that 10-year and minus the money that you lost just in your Canadian dollar asset, I mean, you're really not looking at a much higher rate of return than what you would have got in the US. This is where they kind of convolute the numbers, where people don't pay attention to the full spectrum of what it takes to make real investments here in real estate. So drop a like if that is a true knowledge bomb of truth for you, because it doesn't look nearly as appealing when you start playing with the real numbers here. Now, the other reason I don't get involved in real estate is purely leverage. When it comes to leverage, Warren Buffett always said the biggest enemy that you're ever going to have as an investor is leverage, because presuming you're in my situation, I'm 27 years old, I'm sitting on about $150,000 CAD. Sure, I could go buy a piece of real estate, but the problem is it would take every dime I have, and 100% of my exposure would be here in Canada on one piece of real estate where I'd have to manage it and do all this stuff. And heaven forbid the house burns down, one of the renters destroys the property and I'm stuck fixing it up for a few months while there's no paychecks coming in. That could really hinder my performance. So I don't play around with that, and I don't think anybody really should. And if we take a look at some really interesting statistics here, my girlfriend actually sent these over this morning, you can see what kind of people are buying homes. And if you are aware of the Toronto problem, most people in Toronto don't make much more than $70,000, $80,000 a year as a household income. And you can't afford to live in Toronto making less than $70,000 a year, whether you're renting or owning a home. But we can see here that it's really neat to understand that, people who are under the age of 35 in Canada, only 50% of them have purchased a house and only 41% of them have purchased a piece of real estate in Toronto. And the family number is massive because most people that have families are splitting an income. So let's presume that you're a married couple and you and your wife both work jobs. That means you're probably, let's say you're making $40,000 or $50,000 a year times two. You might be getting closer to that $80,000, $100,000 of household income, which makes sense that more families would be buying these homes. So it's really neat to see these exact numbers because I am getting close to 30 and I can't get over the fact of how hard it is to buy real estate here in Canada. In fact, I've even looked at going down to the US. The problem with buying international real estate is you experience a 15% border tax on your income if you bring it back over the border. So your main priority would be to try and leave it down there and maybe fix up the piece of real estate. But you can buy homes in Florida and all over the States and even Vegas for around a couple $100,000. And with the conversion rate, if you minus that 25% from the Canadian dollar, I mean, yeah, you're going to be paying around $300,000, but that is a lot better than the average median home price here in Canada of around $500,000. Now, this is fascinating stuff, and I'd love to know what you guys think about all of this in that comment section below, because I despise real estate here, and the only exposure I have to real estate is the best real estate offered by RioCan. There are only a few really large real estate income trusts here in Canada, and yeah, I'm not leveraging, the bank's money, which could give me a way more better upside, but at the same time, I'm getting immediate cash flow. I'm a passive investor, so I don't have to actually go to these properties and manage them, and this is a billion-dollar company giving me exposure to dozens of real estate deals all across Toronto, Canada, like Vancouver, and I suggest that you check it out as an option if you are having a decent down payment for a home and, you're debating on whether you should rent or own, which is another big debate. Do you have a family? That is a whole nother debate in and of itself. Maybe in the next video, what I will actually do is break down the full numbers if you're better off buying REITs than owning real estate here in Canada. If that's something you guys like to see, let me know for sure, because I find these videos on Canadian real estate get a lot of attention, and I want to give you guys as much information as possible so you can make the most calculated decision. I'm not saying that buying a home is a bad idea. Honestly, if you have the leverage and say you have $500,000 in the bank, I don't think there's anything wrong with, taking $100,000 or $200,000, putting it into a property, and then putting the rest into a diversified portfolio, ensuring that you're protected against the fluctuations of the Canadian dollar and just the overall markets in general. So I hope you guys enjoyed this video. Lots to think about here. Stay cool, stay awesome. I look forward to chatting to you real soon.